Hi, welcome to today's video. Today's video wants to look at probably the hardest financial statement to prepare within managerial accounting. And that is the statement of cost of goods manufactured. So we'll go through this rather briefly so you get a general idea. Please note all the inventories involved in the equation. So the statement of cost of goods manufactured is the first statement prepared because the dollar amount down here goes to the income statement. So we'll have beginning, we'll have work in process here, and inventory, and over here we'll have the finished goods inventory. So that, again, work in process is where you have like a chair with a couple legs on it, not completed. We'll also have the materials inventory here as well. So we'll look at the first two inventories and then finished goods at the end. So beginning work in process, these are all assumed numbers, $10,000, direct materials. Let's assume there's $8,000 to begin with. We purchased 12, that gives us direct materials available at 20. Less the ending materials inventory of 5 gives us cost materials that were used of 15. So we look at the cost of materials used plus the labor and overhead. So the labor was $6,000, the overhead was $4,000. That gives us total manufacturing cost 15 plus 6 plus 4, or $25,000. When we add that with the beginning work in process, we get total manufacturing cost of $35,000, less the ending work in process because that can't be transferred to finished goods. That's the chairs with the legs missing, of 15. That gives us cost of goods manufactured of $20,000. So that dollar amount now gets transferred to the income statement. So we got income statement, we got sales, $80,000. Cost of goods sold, well, we got the beginning finished goods of $8,000. The cost of goods manufactured, those completed goods that came in, of $20,000. So that gives us goods available at $28,000. Plus the ending finished goods inventory, which didn't sell, of $8,000, gives us cost of goods sold at $20,000. And we subtract that from the $80,000, or we get $60,000 in gross profit. So you can obviously see this is not easy. And so what should I try and remember when I'm producing one of these statements? First thing is that it's the first one prepared. The second thing is you got to think of yourself in like a flow of costs, which we'll talk about in a later module. And the flow of costs looks at, first comes in the direct materials. The direct materials then go to the work in process and are worked on. And all that is over here in the statement of cost of goods manufactured. And the last thing that happens is once the goods have been worked on and are finished, they get transferred over here to the income statement in the finished goods warehouse. So please note that is a later process. So again, we have out here, we have the work in process inventory. Within here, we have the direct materials inventory. Notice we always add the beginning, subtract the ending. Add the beginning, subtract the ending. And the same thing here. We add the beginning, subtract the ending. So again, beginning work in process, ending work in process on the outside, beginning direct materials, and ending direct materials are done on the inside. Again, direct materials plus direct labor plus overhead equals the cost of goods, manufacturing cost incurred, added to the beginning gives us total manufacturing cost, less the ending gives us cost of goods manufactured. That is then transferred to the income statement, and we adjust to get our cost of goods sold. So, a busy statement, yes. A hard statement, yes. But if you get the idea of the flow of cost within a business, that will help you. And we'll look at that in Module 2. I look forward to seeing you on the next video.